Ooh. Okay, can you guys hear me? Are we live?
Yes.
Amazing, amazing, amazing. So I can't hear myself. But guys, listen. So we got rejected from the 115 level, as we saw yesterday. We got rejected on this 115 level. And now the monthly candle for Bitcoin is pretty much looking something like this, which is a very, very, very scary candle. And I'm going to discuss today why this candle is so scary. And I'm also going to discuss today why this bull market has been so difficult. I don't know if you guys have felt it, but this bull market really has been one of the most difficult bull markets that there's ever been. It isn't like the 2017 and 2021 bull markets. And I'm going to show you today basically why this bull market has been so difficult and how you can survive this bull market. Then I want to talk about something much bigger than this bull market, because I think that crypto is finally at what you call an inflection point. It's a point where seriously, the market's about to go from this to this. And I think the inflection point could be as big, if not bigger, than the internet. It's going to be like one of the biggest inflection points that crypto is actually at. And I really want to talk about it. It's all around this new X402 standard that you guys may have heard about. And if you haven't heard about it, we're going to talk about it today on the show. So we've got a very big show for you guys today. I think let's get the show on the road, guys. All right, wakey, rise and shine. Everything's working. Let me know what you think of the new studio, guys. Let me know what you think of our new studio. I told you it would come right at some point, and now here we are. Listen, guys, got a big show for you guys today. I do want to talk a lot about this candle and what this candle actually means, because if you look at this candle, this is what you call the ultimate doji candle. It basically started at one point and ended at the same point, ending at the same point. The longs capitulated, the shorts capitulated, and basically the market's at a real indirection point, right? And I think it's not the end of October yet. So even though we are nearly at the end of October, and we have, let me just quickly get the numbers here. I think we are about 0.32% up in this quarter, and 0.32% up therefore in October. There could be a couple of happenings in the next, or a couple of events in the next 2 to 3 days, which do actually change the direction of the market. And one of those things that could actually happen is the rate cuts and the quantitative tightening and everything else that may happen. So I want to spend some time talking about that today. I also know that a lot of us have been struggling with this bull market, and it has been a really tough bull market. I'm going to show you why the bull market's been so tough. And then we're going to spend a lot of time talking about this new Coinbase X402, because this is the inflection point for crypto. It's one of the big events. So listen, guys, if you're new to the channel, subscribe to the channel. I'm here every single day. I bring you crypto love and I bring you crypto wisdom, and I try and make sense of these crazy markets. If you are a subscriber, help me by smashing the like button, because that really does help us get circulation. I think today's going to be a very interesting show. It's not going to be about like the 10 best AI agents to be buying, etc., but it is going to be a really big and alpha-filled show. I'm going to show you the sectors that you should be looking at, etc. So there's a lot that's actually going on. All right, so without further ado, let's talk about this bull market. Let me know in the chat how you feel about this bull market, and whether or not, if you were here in 2017 and 2021, let me know how your experience of this market compares to all the other markets. I think, or to all the other bull markets. I think if you look at this chart over here, so if you look at this chart over here, I think this chart tells a little bit of a story around why this bull market has been so tough. And the big reason why this bull market's been so tough is because it's been a bull market in every market. Every market is pretty much at all-time highs. But the one market that's not at all-time highs is Bitcoin. You can kind of see that this is the performance year-to-date of a whole lot of different assets. And if you look at the performance year-to-date of a whole lot of different assets, you can kind of see that Bitcoin from the major assets is probably one of the lowest. The Dow Jones is at 9.3%. But then you look at like gold's up 48%. You go look at the Nikkei. The Nikkei is up 30% this year. That doesn't even talk about individual stocks. You got like big individual stocks like Facebook or Meta up 30% this year. You've got Nvidia up 50% this year. You've got the Nikkei, as we said, up 30% this year. And at the same time, the one asset that has been the asset that's supposed to bring the best returns, the crypto asset, the asset that has the highest ranking returns, just simply hasn't performed this year. And for crypto investors who come here and look to make fortunes, it's been quite a disappointing bull market, right? And to make matters worse, not only has the bull market been disappointing, but if you've been here and you've been looking for your fortunes, you've probably been looking in the altcoin sectors. And if you've been looking in the altcoin sectors, that's been one of the toughest places to be. And I think the chart that best describes that is this others versus Bitcoin chart. So what the others versus Bitcoin chart shows is it shows the performance of the altcoins, the smaller altcoins, relative to Bitcoin, right? Now, we've already said that Bitcoin hasn't had the best performance this year based or as compared to other risk assets. But if you take the altcoins and you compare the altcoins to Bitcoin, those altcoins have basically bled since 2022. I mean, let's just quickly get actually to that chart over here. So let's go others versus divided by BTC USD. So if you look at that, oh man, let's see if we can just do others divided by Bitcoin and see others divided by BTC. Otherwise, we'll just use that chart over there. Okay, we'll just use that chart over here. But basically, what that chart shows you is it shows you. Did I say others or did I say other? Let's quickly just say, I said other. That's why. That's right. There we go. Others. There we go. Okay, so if you look at this one on the monthly and you look at it since 2022, basically, you can see that since the 2022 top, the others, the altcoins, have bled about 80% of their value against Bitcoin. And this is in a sector where people are coming to chase huge returns, and they've got those returns. The irony for me is that if you look at the stock markets have been at all-time highs. If you look at, like, for example, the S&P 500, and you look at the S&P 500's performance since January, so let's just quickly go back to January 2025, that's about there, let's just take that over there. The S&P 500 is up over 20% this year, and investors in the S&P 500, even though the S&P 500 is at all-time highs, are currently at fear, and last week these guys were at extreme fear. To make matters even worse, if you invested in altcoins, this is a chart that shows the top, since 2017, 90 altcoins have entered the top 20 by market cap, but most have never, ever come back. That means that most of the altcoins that people have invested in have pretty much died and are not coming back, have never come back, and have pretty much lost everybody their money. And if you look at it over here, you can kind of see the market cap charts of different narratives, right? So I think this is the gaming narrative. And if you look at the gaming narrative by market cap, gaming narrative had a big run. And then since these, so let me go back to a much longer chart. So if you go back to the run that gaming had in 2021, since then people have been holding on to try and get a bigger run in crypto gaming, and crypto gaming just has never ever come back. And the same thing happened with AI agents, the same thing happened with meme coins. Pretty much every single narrative has come for a short period of time, drained a whole lot of money out of the market, and then basically collapsed, and at the same time collapsed everyone's dreams. That's pretty much what's landed up happening. And so it has been a much harder market than 2017 and 2021. For those of us that were here in 2017 and 2021, those were much more linear markets. Why? Because everything ran to all-time highs. Everything ran to all-time highs pretty quickly, and you could have pretty much made money on anything. The only thing that you had to do was to sell at the right time. But in 2017 and in 2021, every single narrative ran. And when they ran, and they ran, and everybody felt like millionaires. And the only mistake that people made in 2017 and 2021 was not selling. This is a very different market. This is an abusive market. The reason why it's an abusive market is because a whole lot of people are holding on to a whole lot of coins and a whole lot of narratives, and they're just hoping that those narratives will recover. And at the same time, those narratives are going lower and lower and lower and lower and lower. Also, given where crypto is at the moment, we're getting good news coming out and markets not even moving. I mean, yesterday we had the approval of the first Solana ETF, right? And it was a Solana ETF with staking. What did the Solana price do? Pretty much nothing. What did the big staking protocols on Solana do? Pretty much nothing, right? So I mean, just have a look at this. So this is the Solana price. This is on the approval of a Solana ETF, believe it or not. And this is 𝗙𝗘𝗔𝗃, which is, you could say, the biggest staking protocol on Solana. And this is a ETF that is approved with staking. And look at JITA, $1.11. It's basically a downward, a downhill. So I looked at this tweet from Berb, and what Berb basically says, he says, the worst bull run ever. Extremely difficult cycle. Yes. Why? Because institutions, the world's largest institutions, are going deep into strategic exposure. Meme coins were the ultimate max stupidity value extraction that happened. And then we had Donald J. Trump, who was supposed to help us. And what did he do? He brought us tariffs, and he brought us 2 mass liquidations. If you think about most the damage has been done in the cycle, it's been in Trump's February tariffs, and it's been in Trump's recent tariffs. That's where the money has happened, or most of the losses has happened. So if you're stuck in this paradigm, or if you're caught in this paradigm, or if you're feeling that this is the hardest bull market ever, it has been a very, very, very tough bull market. But I want to give you some hope in terms of what's happening in crypto, and what's happening in crypto right now, and what's happening in the world right now that might actually change your view or make you hold on a little longer. The first thing that I'm seeing is a lot of people capitulate. And when I say a lot of people capitulate, they're kind of saying, look, well, I'm not getting the returns in crypto, I'm going to move to stocks. And that to me is very, very, very much a capitulation symbol. And usually after a capitulation, the users that manage to hold on for the longest actually end up making money, providing that they're holding on to the right coins and the right narratives, etc. So that's the first thing. The first thing is I see a lot of people going into stocks. The second thing is, the one thing that you cannot deny is the fact that global liquidity is increasing. Whether you look at US liquidity or whether you look at world global liquidity is increasing. And risk assets do better as global liquidity increases. And crypto is the ultimate risk asset. And so what you had a situation where the markets were running, but the Russell 2000 wasn't actually running, right? So if you look at the Russell 2000, which is the smaller stocks in the US, they weren't actually running until global liquidity got so high that eventually the Russell 2000 actually started to run, and we're now getting this massive breakout of this cup and handle. The same thing with gold and silver. First gold started running, and then only after a certain amount of time, silver started running. As global liquidity starts going up, and now with the Fed destined to cut QT or to end quantitative tightening, hopefully tomorrow, and we'll be here live tomorrow. And what we decided to do on the live tomorrow is we're going to be watching the Fed do QT, and we're going to be running a Banter Royale at the same time. So Dylan, Sheldon, David are all going to be trading, and we're going to be watching the Fed at exactly the same time. It's going to be like the most jam-packed alpha Banter Royale you've ever seen. I promise you, it's going to be so much fun tomorrow. I really can't wait for you guys to see it. I hope it all works out. I hope the tech all works out, because it's quite heavy tech that has to happen. Anyway, so we think that tomorrow Powell will cut QT.
Our long-stated plan is to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserves conditions. We may approach that point in coming months, and we are closely monitoring a wide range of indicators to inform this decision. Effective interest rate control. Our long-stated plan.
Okay, so long story short, I think we're going to start getting QT. Now, what we know around QT is generally for alts to start running and real assets to start running, you need quantitative easing to start. Quantitative tightening is one part of one part of the formula, but the other part of the formula that is super important is for quantitative easing to start. Think about this. Quantitative tightening is the Fed taking water out of the swimming pool. Quantitative pausing is no water out, no water in. Quantitative easing is when you put more water into the pool and we actually start moving up. And that's pretty much where we're at the moment, right? Right now, we're at the point of quantitative tightening stopping. That is generally quite good for the altcoins, but the real run on the altcoins actually happens when quantitative easing actually starts. We're not expecting quantitative easing for quite a while. I must be honest, that's not something that we're going to start getting quantitative easing, but we are getting into the end of restrictive conditions, right? And so we should get an economy and an environment where we're getting a lot more money into the economy, and that's usually good for Bitcoin and risk assets. So the big question is, if you're caught in this market, how do you survive this market? And I want to just help you guys with a couple of things around how to survive this market. I think the first thing is that you've got to appreciate that this is not a market for chasing narratives. And if you do land up trying to chase shiny objects all the time, and if you do land up jumping from one shiny object to one narrative to another narrative, you're going to get blown out. If you're playing meme coins and AI agents and I don't know what other narratives happened, you're going to get blown out in this market. The idea is to take a fundamental view of which way crypto is going, and then to bet on the fundamental narratives that you see happening in multi-cycle plays, right? So if you've noticed my portfolios, and if you look at my portfolios, one of the things that I'm really proud about in this cycle is no matter what the portfolio is, my portfolios have been pretty much the same. Like Bitcoin, Solana, 𝗬𝗎, Hyperliquid, 𝗨𝗏𝗏𝗏, Jupiter, 𝗙𝗏𝗏, Link, Athena, Curve. If you look at like this portfolio over here, it was Bitcoin, Sol, Hyperliquid, ETH, BNB. I wasn't jumping around. I did put small things into like Popcat and Fartcoin and whatever else. And yes, in those ones, we lost 2% of the portfolio. But the big bets that we've been placing have been on big fundamental crypto narratives. So one of the big keys in this market to surviving this market is stop chasing the shiny objects. If you're coming in here to chase a shiny object, okay, then go to the meme coin casino and play on the meme coin casino. But otherwise, you've got to really, really, really take fundamental bets. If you're not taking long-term fundamental bets in a cycle like this, then you're pretty much getting wrecked, because you've got to take bets that you can hold for a long period of time without getting liquidated or without being able to, without capitulating. And those require real fundamental bets to be taken, right? And that's exactly what I said. I think if you look at your portfolio, BTC and the strong ones must be a big part of your portfolio. Only multi-cycle tokens. You must only hold multi-cycle tokens. Remember, we could be at the end of the cycle. I mean, 𝗕𝗏𝗏 is calling for the end of the cycle, and 𝗕𝗏𝗏 is really someone that I respect in the game. He's calling for the end of the cycle. There's a lot of other people calling for the end of the cycle. I don't believe that it's the end of the cycle, but you've got to act as if it's the end of the cycle. And if it is, you want to be holding multi-cycle plays. If you want to mess around, take a small percentage of your portfolio. You can farm the airdrops and you can do everything else. But ultimately now, this is the time when you do have to have multi-cycle plays. And that's one of the things that I wanted to talk to you about. Is how to adjust your portfolio and build your portfolio for these multi-cycle plays. And the reason why I think that's so important to talk about now is because I think today, when I say today, in this period of time, we're at one of the biggest inflection points for crypto. I don't think that the market has yet digested how important the events of the last couple of days have been for crypto and for the future of crypto. And if you want to understand what I'm talking about here, I think you need to go back to the understanding of exactly what crypto is for and how crypto was designed, right? If you think about the real use case of crypto, and this is something that I've been talking about ever since 2017 and 2016, and people were laughing at me around why do we need smart contracts and why do we need blockchains? In 2017, there was a big movement that said that we don't really need anything but Bitcoin, and the Bitcoin maxis came out against Ethereum and they said, why the hell do we need smart contracts? That's such garbage. You don't need smart contracts. Today we're realizing that smart contracts are going to form the basis of this new internet economy. And again, one of the big reasons why crypto was created was for trustless settlement between parties. So crypto has always been for trustless settlement between parties. And what that means is that two parties that don't know each other can settle without the risk of a reversal on the settlement of the transaction immediately. And at the time, I used to use an example where I used to say, if my car and your car are both driverless cars and we're both driving on the highway and I want to overtake your car, then the two cars need to negotiate with each other. So my car would go behind your car. I'd say, look, I want it to overtake. Your car would say, okay, well, Run, if you want to overtake my car, you need to pay me $10. Cool. I say, cool. You say, cool. We agree. You move over, I overtake. You need to get your $10. You can't wait for Visa or MasterCard to do it, because if you do, then you could get a thing called a chargeback. it takes too long, it's not an immediate settlement. And that's really, in my opinion, why crypto was developed. Crypto was developed so people that don't know each other and don't trust each other can transact through a smart contract immediately with each other. And so the last couple of days, and the last couple of months and days, things have happened. And the big thing that's happened is we had the launch of AI agents. And what we realized is that AI agents are amazing if you think about ChatGPT, but they haven't been transactive. So you cannot tell ChatGPT to book a holiday for you, or you cannot tell your AI agent to actually transact for you on the web, let alone getting two AI agents to interact with each other or to transact with each other, right? Imagine a world where there's two AI agents and they meet in the interweb, and they've got to translate, right? They've got to transact. That is the reason why crypto was created. And what we've seen in the last couple of days is we've seen a major shift in the narrative. The first part of it is that PayPal and ChatGPT have basically powered up. And they've said hundreds of people who will use ChatGPT and PayPal will be able to check out using ChatGPT in just a few steps. Which is, yeah, I mean, it's one step closer to agentic AI, but it's ultimately, that's not really agentic transactional AI. Then a few months ago, or a few weeks ago, it's actually about a month ago, Coinbase and Cloudflare made an announcement that they're launching a platform called X402. Now, what is X402? X402 is a standard where people can transact trustlessly and immediately over the internet. Okay, so it's a protocol that allows people and agents to transact trustlessly and immediately over the internet. No credit cards required. No filling in of forms required. Literally just getting to a pay gate on the internet, transacting, and then being let through that internet. So I'll read this for you. It says, big news, Cloudflare and Coinbase will be launching the X402 Foundation to establish the universal standard for AI-driven payments. Legacy payments weren't built for machines, but X402 changes that by embedding payments directly into web interactions, enabling AI agents and APIs to transact as easily as they can exchange data. So you can almost think about like a situation where on the internet, if an AI agent wants to read a web page, or an AI agent watches an advertisement, if you want to call it something like that, immediately there can be a transfer of money for that micro transaction, and that happens in crypto, and that happens on the standard which Coinbase has developed. So Coinbase developed it, and they've partnered up with Cloudflare, they've partnered up with Google, and so this is now becoming a de facto way for AI agents to transact with each other trustlessly and immediately. Now, the difference between the trustlessly and immediately is, if you think about PayPal and ChatGPT, that's great, but that's not trustless and that's not immediate, right? Because PayPal still has settlement and PayPal is not trustless. PayPal can still stop your transactions and stuff like that. Whereas if you think about it in crypto, you know that it's trustless, it's not reversible, and AI agents can now start transacting trustlessly with one another. I found a video which is really worth watching. I want to see if I've actually got it for us here. I want you to watch this. It's a 2.5-minute video, but I really think that this explains it brilliantly well. It comes from Finematics, but just watch this.
If you could pay for a single API call without logging in, meet X402. X402 isn't just another payment layer. It solves a 25-year gap in the Internet's foundation by finally putting HTTP 402 to work. X402 is an internet-native payment protocol created by Coinbase. It repurposes the long-unused HTTP 402 payment required status code, which was originally reserved.
So, I mean, how many times did you get to a website and it said HTTP 402 payment required? That effectively means that to get past that point, you need a payment. So how do you make the payment? And that is what this standard revolutionizes.
First, for digital cash payments in 1999, but never implemented. X402 is an open payment standard that allows services to charge for access to their APIs directly over HTTP. It enables programmatic payments for resources without accounts, sessions, or credential management. This makes it highly suitable for AI agents, allowing them to make microtransactions autonomously. With X402, any web service can require payments before serving a response, using crypto-native payments for speed, privacy, and efficiency. X402 is designed to be chain agnostic and allows payments across multiple blockchains, including Base, Solana, Polygon, and Near. The protocol itself adds no extra fees. You only pay the native blockchain transaction cost. Recently, X402 has been gaining broader adoption by partnering with major tech players, including Cloudflare, and is now used by AI agents on platforms like Virtuals. To fully understand how X402 works, let's go through a simplified communication flow. Client initiates a request to the server for a paid resource, for example, to access a premium API or paywalled content.
This is the important part. This is where you realize just how powerful this is. So like imagine you're getting to an article on the web that the agent wants to read or you wants to get information from, and it's paywalled. All of a sudden the agent can just pay the paywall, pay crypto, and the transaction's finished.
Server responds with HTTP 402 payment required, including the payment requirements in the response body. Client prepares and submits a payment payload based on the provided requirements. Server verifies the payment payload either locally or through a facilitator service. Server settles the payment and confirms transaction completion. Server responds with the requested resource, assuming payment was successful. This interaction is stateless, HTTP native, and compatible with both human applications and automated AI agents. Although X402 is still in its early stages.
So I think you understand, or hopefully you understand how this basically works. You're basically allowing AI agents to trade with each other online on micro transactions. And the only way in the world that you can actually do this in a trustless manner where you can settle immediately is actually using crypto. Now this is really crypto's biggest and most killer use case, because if you think about how all transactions are going to take place going forward, it's all going to be done via Internet of Things or via AI agents. You're just going to have a web of AI agents transacting with each other. And the only way that these guys can transact with each other in a trustless and immediate manner is using this X402 measure. And so really what we've created here is we've created the killer use case for crypto. And you ask yourself, okay, why now? Why did this happen now? I'll explain to you why it happened now. It happened now because number one, we had the rise of AI agents. Number two, we had the whole stablecoin narrative. And number three, we had a favorable government that's actually open to these kind of transactions. At the same time, Coinbase has been, I think Coinbase has been very smart, and they've preempted this whole narrative and this whole move for a long time, and they've been building this protocol. And they found the perfect time to launch it, right? And so now you've got this world where agents are going to be transacting with one another, immediate settlement. It's obviously going to be legal because the administration is very much for it. It can happen on any blockchain. Completely chain agnostic, and it's really crypto's killer use case application, allowing computers that don't know each other to trade with each other and to profit with each other and to transact with each other. And that's why I think that it's really is an inflection point for crypto. If you want to get a better look at where this is happening, in fact, probably worth reading this. I think I read this article a few times just because I think it was so well written. It's an article that came from 𝗪𝗏. It says the internet has finally built-in payment layer. Sorry, the internet has a built-in payment layer. X402 provides clients such as AI agents, APIs, or applications with a standardized way to request and pay for daily access through HTTP. When a client asks for data or a service, the server responds with a 402 payment required, a message that includes the payment instructions, typically in USDC or any other stablecoin. Once the client pays, the transaction is verified and the requested resource is delivered. Since May, the volume has jumped from $110,000 to 1.5 million. Now you can actually go to this dashboard, which is called x402scan.com. And what x402scan says basically is it shows you the total amount of volume, the total amount of transaction, the total amount of buyers. It also shows you which agents are conducting these transactions, right? Because remember, in a future agentic economy, what you want to see is you want to see what are the transactions being conducted by the agents and who are the agents that are actually conducting the economy. So how are you going to make decisions as to which AI agent to use to book your vacation? You're going to go and look at all the AI agents and you're going to say, look, what is the best or the highest volume AI agent that is transacting and who are they transacting with and what is their reputation score? And so right now there are very basic dashboards. The first dashboard is called 𝗥402scan.com. But then you've got a thing here called 𝗥402scan Composer. And this shows the number of agents and the number of users and the number of calls that each agent is actually doing. And again, this is going to become a new standard to show us which AI agents are transacting, what they're transacting with, what their reputation score is, etc. I'll show you another breakthrough that's happened. So there's two standards. The one is 𝗥402. 𝗥402 is this this payment layer or this payment protocol layer, and then you've got this thing called 8004. Now 8004 is a registry of AI agents on the blockchain. Each one will have an associated wallet. And this is important because you can search the agent and pay their wallet. So it's almost like, remember in the old days, there was a phone book, a phone directory or a directory of bank accounts. That's exactly what 8004 is. When you look at 8004, 8004 will show you who's the agent, what's their reputation score, and what is their correct account number before you actually land up making a payment. So then you can go and verify all the payments made by other agents to this specific agent to make sure that they're paid for the right thing. So we're at the beginning of a brand new crypto revolution, a revolution where our crypto rails are starting to be used for what they were actually built for. Because crypto wasn't actually used, a crypto rails wasn't actually built for me and you to be able to trade meme coins against each other. Crypto rails were built for robots and AI agents and for what they call Internet of Things to be able to trade volume between one party and another party in a trustless way. And that's why when you go back to all the old crypto writings, they all say trustless, verifiable, immutable, irreversible transactions, right? That cannot be changed and that are transparent and can be seen by everyone. And that is effectively, I think what's made this possible is this 𝗥402 protocol, which was launched with Coinbase and Cloudflare, and Google is a partner, by the way. Google's also enabled it. Okay, so now you ask yourself, okay, great, I buy into this run, I love this narrative, but what do I do? How do I make money actually buying into this narrative? Because I'm actually here to make money. As I said to you, I mean, I love the alpha and I'm here for the tech, but I'm actually here to make money, right? And so you're thinking to yourself, great, there is this new narrative. How do I make money from this new narrative? So remember in December last year, we got this run of the AI agents and virtuals exploded, and virtuals effectively gave people the platform to launch a whole lot of different AI agents. And those AI agents at the time could do nothing really except maybe collect information and maybe spread some of that information on social media. That's what those agents were able to do. Well, now that whole game has changed, right? Because now those agents can actually start transacting with one another. And so you got to start thinking to yourself, in a world where AI agents start transacting with one another, what do you want to own? What do you want to be a part of? So I found this graphic which actually shows it pretty clearly. So the first thing is you kind of got to think to yourself, in this agentic economy, where are the agents going to launch? Which blockchains are going to be the blockchains where these agents actually launch? Because remember, now they're transacting. When you got AI agents that are transacting using blockchain, that actually does increase a lot of throughput on the chains. I think one of the biggest beneficiaries here is going to be Base. Because Base is the AI chain, and also Base is, it's Coinbase. 𝗥402 was developed by Coinbase. I do think, though, that things like Solana, where a lot of agents will launch on Solana, will benefit. I think things like Peak, because I think Peak is the blockchain for Deepin and specifically robotics. I think they'll do very, very, very well, right? The wallets, you can't really invest in the wallets. I think then what you want to be looking at is you want to be looking at the things like virtuals, things like Clanker, things like, you want to look at the AI agents that those guys are launching. I am very wary of getting into individual AI agents, because I think playing the individual AI agents is like playing the meme coins, whereas you could be playing the dexes. I believe that you should be playing the dexes in this narrative. I think like holding 𝗟𝗏𝗏𝗏 right now, probably one of my highest conviction bets in the cycle. Why? Because all these AI agents that are going to be launching are all going to be traded on 𝗟𝗏𝗏𝗏. The base app is going to go live in November or December, and then people are going to be trading on 𝗟𝗏𝗏𝗏. So I think the biggest custodian here is base, and I think the biggest custodian on base right now is 𝗟𝗏𝗏𝗏. So like I've definitely got a lot of 𝗟𝗏𝗏𝗏. One of the biggest beneficiaries here, but I don't know if there's a good entry point here, is to get into eigenlayer. And the reason why I say it's good to get into an eigenlayer is because eigenlayer seems to be the verification layer of all these AI agents, right? So there's a little article which I found about. I was doing quite a bit of research there on ChatGPT, and I was like, explain to me why eigenlayer is the big beneficiary of X402. The best explanation that I found here is that if you think of X402 as payments, eigenlayer is the verification layer, because eigenlayer is all about using your staked ETH to verify other transactions or other platforms. And if you're wrong, you lose your staked ETH gets slashed, basically. So it's almost like eigenlayer becomes the verification layer. And Google has partnered up with eigenlayer. They made an announcement a few months ago that Google has partnered up with eigenlayer to be their verification layer. The only thing with eigenlayer is that it's got a fully diluted valuation of $2 billion, and there's massive token unlocks. So question is, like, where does it go from $2 billion to $3 billion? You know, at the same time, can you fight those token unlocks? So even though I think it's a very, very good protocol to actually be involved in, when I look at the chart of eigenlayer, I mean, like, that's quite a sad chart. And the reason why that's such a sad chart is because the FDV is incredibly high. And the token release schedule, I'll try and get you a token release schedule. So, I mean, you can look at the fully diluted valuation. So the market cap is 441 million. The fully diluted is 2 billion, which means that 75% of its tokens haven't been emitted yet. Which means that if you buy this thing, then you're going to be drowning in token releases. And so, to be honest, like, as much as I love the protocol and I love what the protocol does, I just can't justify coming into this protocol at this time when everyone's been selling. The other place that I would look is I would look at blockchains that will be good with AI agents. And there's one in particular that I want to speak about. It is one of our sponsors, but this is not a sponsor plug. That is a blockchain called OpenLedger. I don't know if you guys have ever had had a look at it. OpenLedger is a chain that is specifically built for AI. And one of the things that OpenLedger actually does is it allows users to monetize their activity on the chain, the data that they're basically emitting on the chain. The protocol actually allows. It's trading at a fully diluted valuation of $375 million, and that's, for me, is a slightly better valuation than paying in the billions of dollars. So that's the story. Like, I could have done a show today and said buy this and buy that. The truth is, I actually really believe in this tweet over here, where the guy says, look, fade this entire narrative right now. I'm serious. Buying anything right now will have you at a 50%, minus 50% in a couple of weeks. I guarantee it. Use the time to study and to buy the legitimate ones, and buy them in a few weeks when everyone's panic selling the bottoms. The tech game, the tech is a game changer, but as always, the first projects are the vaporware. And I really think that this is a great tweet. There's a lot of projects that are out the gate first and fast. That doesn't mean that they're going to be the projects that actually succeed. This is one of those narratives where you got to take a very long-term approach and say, look, this is we know we're going into an agentic AI future, and in that agentic AI future, what do I actually want to own? So yeah, that's the narrative. Much bigger than like your daily shows and stuff like that. This is like, I really hope that I've showed you how we've found and we've hit another big use case for crypto, which is this agentic AI narrative, which is a massive narrative, which I think is going to play out like it's really going to bring in another dimension into crypto. In a bull market that has been so hard, this has been one of the days where I said like, wow, like if I've ever questioned why I'm in this industry, I now know that that's why I'm in the industry. And then I ask myself, well, okay, based on that, how are my bets based on an agentic economy? And that's what I'm going to do probably in the next couple of days. I'm actually going to build you the if you want to invest in crypto just for the agentic economy, what's the safest way to do it without buying all these different AI agents? And that's what I'm going to build that portfolio in a couple of days. Remember that tomorrow we're doing the FOMC live. So we'll have our normal show, and then we're going to have an FOMC show tomorrow, a live FOMC show where we're going to be trading a battle royale. Also, guys, remember that if you want to buy these amazing wallets, and again, I think you should move all into hardware wallets. These are hardware wallets. These are the Tangem hardware wallets. Remember that their special ends at the end of October, which is like now. Like you got like basically a day or 2 days to be buying these wallets. So look here, I just want to remind you how these things work, right? The biggest problem with buying a wallet is that you have to remember your seed phrase. Now, I don't know about you, but that seed phrase gives me the most anxiety in the world. Who has it? Where are the different parts? Where did I hide them? And blah, 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 blah. Where is it all going? This wallet, this Tangem wallet, is the most cost-effective wallet and doesn't actually need a seed phrase because it basically stores the seed phrase on these cards that come with the wallet. And you buy the wallet with a set of these cards. And it's the most affordable wallet that I've basically found. So if you look at, like, there's a 10% off plus 5% Bitcoin reward plus 25% off the ring if you buy any of the wallets. Let me just, okay, so you can see the 3 card set is like $60, the 2 card set is like $49, and then if you buy the ring, which by the way, the ring is my favorite thing, it's $112, and there you basically, that's how you walk around with your crypto wallet. Most people think it's like an Aura ring or that it's taking your measurements. Meantime, this is actually your crypto wallet, which you can just basically tap wherever you go, and basically you can end up spending your money or just storing your crypto. So guys, if you want to buy it, you've got 2 days left, three days left to buy it. Also, you support the channel when you buy it. I'll see you guys again tomorrow. We've got a big day tomorrow. Tomorrow there's a Banter royale. There's the FOMC. Hopefully, I see the candle here is moving, which is great for us. I've been watching out of my one eye. I've been watching the Bitcoin chart. Here we go. You can kind of see that monthly candle starting to get a little bit of. We need this monthly candle to pick a direction before the end of the month, and I think it will. Let's quickly look at the altcoins. I mean, while we have like 1 or 2 more minutes left together, let me know what you think of the new studio, by the way, guys. Okay, let's have a look here. Trump. I hear they're doing a treasury company for Trump, and I heard they raised $1 billion for a Trump meme coin treasury company, believe it or not. See, pump is up to 5, hyperliquid. Not much going on. I mean, Zcash is having a little bit of a move down. Yeah. All right. I will see you guys again tomorrow. Until then, trade well, my friends.